Coming to amalgamation, this is problem number 3. I'm sorry, yes, this is problem number 3 in page number 10.125. Amalgamation of companies. In this question, we are given with the balance sheet of two companies, Ram Limited and Sham Limited. Prepare balance sheet of Rajesh Limited, assuming entire purchase price is paid off in the form of equity shares of rupees 100 each in Rajesh Limited. Amalgamation is in the nature of merger. See, you are all well aware that amalgamation, it is on two types. One is in the nature of purchase and another one is in the nature of merger. The given problem is in the nature of merger. I already explained to you nature of merger in the sense excess of purchase price is adjusted against the reserves and surplus. Point number 1. And point number 2. All the assets and liabilities are normally transferred to the purchasing company in case of a nature of merger. That is not in case of nature of purchase. So this is the difference you should keep in mind. In this case, the method of purchase consideration, the calculation of purchase price is not given, but we are given with entire price is paid in the form of equity shares of rupees 100 each. So since the method is not given, we have to calculate the purchase price, that is the purchase consideration, based on the assets taken over, that is all assets are taken over as per the condition, minus liabilities taken over. For calculating this, we should not take share capital, reserve fund, P&L account. Only the liability to the third party we have to consider. So by taking, here I have mentioned sundry assets. Since for want of time with regards to that video recording and that is the space constraint, I mentioned sundry assets. But in examination, you should mention individual asset, name of the individual asset. Various assets are given, all the assets are taken over by the company for both the Ram Limited and Sham Limited. Total of Ram Limited assets that comes to 11,30,000 and total of Sham Limited assets that comes to 6,50,000 minus liabilities creditors. Then the balance is 1130 minus 80, which is the purchase price. As per the condition given in the problem, the purchase price is paid in the form of equity shares of rupees 100 each. So the total purchase price of 10,50,000 plus 6 lakhs, that is 16,50,000 is discharged, is paid. The mode of payment for purchase price, whatever the name called, is in the nature of, in the mode of equity shares of rupees 100 each. Then, since this is the merger method, we have to take the total capital of Ram Limited and Sham Limited, that is 10 lakh plus 5 lakhs, 15 lakhs, minus the purchase price calculated 16 lakhs 50,000. There is a excess purchase consideration over the capital, which is 1,50,000. As per the rule, again I repeat, excess purchase consideration, that is the purchase price, over the capital, as per the rule, that amount of 1,50,000 is supposed to be adjusted with reserves and surplus. If any balance is lying, that should be shown in the new balance sheet. Whereas in this case, purchase consideration is 16,50,000, whereas the capital is only 15 lakhs. So excess purchase consideration is 1,50,000. It is adjusted against the reserves and P&L account of both the companies. So that 1,50,000 is adjusted there. So no excess is available. So we cannot show anything in the new company. Then, as far as that entries are concerned, since we are required to prepare the balance sheet, so we have to prepare opening entries. First one opening entry is business purchase account data to liquidator of Ram Limited and Sham Limited. Technically speaking, please mind it, if you want you make a note of it. Technically speaking, in case of merger method, we have to mention business merger account data to liquidator of Ram, liquidator of Sham. But practically speaking, we are not finding that much technical importance with this. So better business purchase account debtor to Ram Limited and Sham Limited. Both the things are correct. Then second entry is sundry assets account debtor to creditors to business purchase. Here also I want to stress, I mentioned sundry assets, but in examinations you please pause the entry with individual entry. That is, what are the assets given? Land and building, plant and machinery, goodwill, furniture, etc. Like that you mention individual assets of both the companies. So the assets of Ram Limited, assets of Sham Limited, that comes to 1780. 2. Creditors taken over of Ram Limited is 80,000 and Sham Limited is 50,000, 1,30,000. Then business purchase that we have already calculated. If entry number 2 is correct, your balance sheet will get tallied automatically. How? Because sundry assets supposed to be represented with individual assets. Then creditors, that will be in liability side. Business purchase, that is the capital, that should be represented in the form of payment of purchase consideration. So if entry number 2 is correct, automatically your balance sheet will get tallied. Then third one entry is liquidator of Ram Limited, liquidator of Sham Limited, debtor to equity share capital. This is the entry for payment, mode of payment for purchase consideration. That is, you ascertained 16,50,000 as your purchase consideration. How it is paid in the problem, that is, please have a look on that adjustment number 1. Entire purchase price is paid in the form of equity shares of rupees 100 each. So purchase consideration, that is the purchase price, is paid in the form of the shares of rupees 100 each. How it is paid? Purchase consideration of the individual liquidating company that are to how it is paid equity share capital as far as this problem is concerned. Suppose if it is paid in the form of cash, if it is paid in the form of preference shares, then that should be mentioned accordingly, right? The entries are over. Now we have to take the balance sheet. What is that? You know very well. One part consists of assets. What are all the assets taken over by the company? You mentioned sundry assets. So the individual sundry assets, the details for the sundry assets, we have to record. Then liability side, that consists of first share capital. How the share capital is paid, shares are paid, purchase consideration is paid. It is in the form of the share. So share capital. Then liquidating companies creditors taken over by the new company, so that is creditors. Suppose if debentures are taken over, if any other things are taken over by the new company, that is a purchasing company, that should also be given in this balance sheet. Now the balance sheet is supposed to be tallied. Then one more point you should know, suppose if any of the expenses are bared by the new company, that is purchasing company, then that expenses should be adjusted against the goodwill. This is point number 1. And another one important point in entry number 2, since we had purchase consideration in the form of assets basis, asset minus liability is taken over. Suppose you are having sundry assets, creditors and business purchase, that is the purchase consideration. If there is a difference in second entry, entry number 2, that entry in debit side is supposed to be considered as a goodwill, and the difference in the credit side, that should be considered as a capital reserve. So that we should always keep in mind, if the difference in the entry number 2 should be as either goodwill or the capital reserve, accordingly that should also be entered in the final balance sheet. Okay, this is the example for essay type question, and moreover minded, this is under the basis of nature of merger, purchase price, and the amalgamation is in the nature of merger method.